It's pretty hard to ignore all the hype around Nvidia these days. I mean,
Yeah.
their market cap is it's ballooned
Oh, yeah, I have.
to over $2.8 trillion.
That's a huge number.
It really is. When you think
Yeah.
about it, it really puts into perspective just how central they've become to this whole AI revolution that's happening. With the listener out there trying to make sense of all this, I mean, it begs the question, what is actually driving this just incredible valuation?
It really does. NVIDIA has really, they've evolved, from a
Yeah.
graphics chip company to really being the central player in the future of technology. And their growth has been just extraordinary. Understanding the fundamentals behind that is key.
Yeah. And that's exactly what we're going to do today. We're going to unpack that for you. This is not your typical deep dive into an undervalued stock. Today, we're actually taking a value investing lens inspired by Warren Buffett to Nvidia, NVDA. We're asking, do the fundamentals of the company actually justify this just colossal valuation? It's a little bit of a different angle. Looking at this high-flying company through a framework that's usually reserved for those undiscovered gems.
Yeah. Precisely.
Yeah.
Even when a company isn't trading at a, seemingly low price, applying a value framework can be really helpful in actually assessing, the strength of the business, the management, its long-term potential.
Yeah.
All of that can be gleaned from this.
Yeah. For this, our primary source is the NVIDIA Deep Research Analysis Plan.
Okay.
Really comprehensive look under the hood. Our mission today is to extract the key insights from this analysis. We're going to be examining their business model, how effective their leadership has been, the financial health of the company, their really commanding position in the market, and just the various risks that they face going forward. We want to give you a shortcut to really understanding what's making NVIDIA tick.
Yeah. Equip you with the essential knowledge to form your own informed opinion about their investment potential.
Exactly.
Sifting through all the details.
Yeah. We're going to do the hard work for you.
That's right.
So in this first half of our deep dive, we're going to focus on three really crucial areas.
Okay.
First, we'll get a solid understanding of NVIDIA's business. What do they actually do? How do they actually make money? Then we'll evaluate the leadership team, their track record, how are they allocating the resources of the company. Then finally, we'll dive into the financials, the key metrics, the overall stability. As we unpack these chapters, you'll start to see why NVIDIA has become such a dominant force. Okay, let's dive right in. Chapter 1, Business Understanding. At its core, what is NVIDIA all about?
So NVIDIA essentially operates through two main segments. You have their graphics segment,
Okay.
which is, a home to their popular GeForce GPUs, which are for gaming, and their professional-grade Quadro RTX GPUs, which are more used in visualization and content creation. But the real engine of growth now is the compute and networking segment. And this includes, their data center platforms, the systems that are vital for, artificial intelligence, high-performance computing. That's basically very powerful computers that are used for complex simulations and research.
Yeah, like the stuff you see in the movies.
Exactly. And the advanced networking technologies that they got through their acquisition of a company called Mellanox.
I see. So it's a significant evolution, isn't it? It's almost like they saw this wave of AI coming and they strategically shifted their focus. They were able to leverage their expertise in graphics into this massive new market.
Yeah.
How does this actually translate into how they generate revenue? For the listener trying to understand NVIDIA's income streams, where's the money coming from?
Yeah, so their revenue streams are now quite diverse.
Okay.
Reflecting this kind of evolution. They still get significant revenue from the direct sale of their GPUs and their, integrated chip systems. However, they also license their technology to other companies.
Right.
And a larger portion of their revenue is actually coming from software solutions, integrated software solutions, and cloud-based services.
Oh, interesting.
And this spans across a bunch of different sectors. So you have gaming, professional visualization, the booming data center market, and even the autonomous vehicle space.
Wow.
The growth in the compute and networking segment really underscores, the increasing importance of AI adoption across just all these industries and, where their future growth is likely to be concentrated.
That makes a lot of sense. So when we talk about their key products and services, it's clearly not just about, those gaming graphics cards that everyone sort of knows them for.
No, not at all.
What are some of the standout offerings in these different segments that are really driving their business?
Okay. So in gaming, their GeForce RTX series is really their flagship, right? Known for the features like real-time ray tracing.
Oh, yeah, I've heard of that.
and DLSS, which is basically it uses AI to kind of boost the game performance,
Yeah.
but while still maintaining visual quality. For professionals, there's the Quadro and Nvidia RTX GPUs, which offer, high-end processing power needed for like complex content creation and scientific work.
Makes sense.
But the data center and AI space, that's where you see the most powerful offerings. So you have like the Tesla A-series and the cutting-edge H-series GPUs,
Okay.
including the Hopper and Blackwell architectures. And these chips power their DGX platform, which is specifically designed for like demanding AI training and inference tasks,
Wow.
as well as high-performance computing applications.
I see.
And we can't forget networking. So with Mellanox, they provide the high-speed InfiniBand and Ethernet interconnects, which are crucial for, data centers to operate efficiently.
So it's not just the physical hardware they're selling. Software seems to be a really critical part of their overall value proposition to customers.
Oh, absolutely, yeah. Their software ecosystem is a major differentiator for them and a key reason why they have such a strong market position. Their CUD, which is their parallel computing platform, has become basically the industry standard for AI development.
I see.
It allows developers to really, harness the massive parallel processing power of NVIDIA GPUs.
Mm-hmm.
And then you have, NVIDIA AI Enterprise, which is a suite of AI software and tools.
Mm-hmm.
You have Omniverse, which is for 3D simulation and design, vGPU for virtualizing graphics, and G-Drive for the development of autonomous vehicles. So it's really this tight integration of hardware and software that's central to their success.
Yeah.
And the significance of CUD, in the AI world just cannot be overstated. It's it's the foundation that so many developers and researchers rely on to actually build and deploy AI applications.
Which leads us perfectly into their market position. It
Yeah.
sounds like they're not just a player, they're really a dominant force.
Yeah.
For the listener out there trying to understand the landscape, where do they really stand out?
Oh, they dominate. So in the desktop GPU market, their share is consistently over 80%. But their dominance is even more pronounced in the data center GPU market. There, they controlled around 95% market share.
Wow. Almost a monopoly.
It is. It's a near monopoly in such a strategically important area, underscores their central role in this AI revolution.
Yeah.
And, their huge market cap. I mean, it puts them among the most valuable companies globally and reflects this leadership position and their revenue growth in their compute and networking segment fueled by this incredible demand for AI. It highlights their pricing power.
Yeah. So fundamentally, what is the core value that NVIDIA provides to its customers? Why are companies choosing their solutions? What's the draw?
I mean, it boils down to this: solving really complex computational challenges and accelerating AI adoption and deployment.
Okay.
They provide the high-performance GPUs and solutions that really empower businesses, researchers to tackle these previously intractable problems.
Yeah.
Drive innovation in various fields. And, they position themselves as offering the lowest total cost of ownership for AI computing.
Okay.
When you consider all the efficiency gains and performance that their platforms deliver, they enable big improvements in performance for, demanding applications. They deliver the best visual fidelity.
Right.
And importantly, they offer this really open and accessible platform through CUDA. And that fosters this huge community of researchers and developers,
Okay.
which fuels further innovation.
So to recap chapter 1 for the listener, NVIDIA designs and manufactures GPUs, a suite of related software. They make money by selling this stuff to various markets and licensing their technology.
Yeah.
Makes sense. All right, chapter 2, management evaluation. When you think about long-term investing, the quality of the people at the top is absolutely paramount.
Mm-hmm.
What does the analysis tell us about the company's leadership?
Okay. So at the helm is Jensen Huang. He's the co-founder and CEO. Has been since 1993, so long tenure there. And his vision, his strategic vision has been absolutely critical to NVIDIA's positioning at the forefront of AI.
Yeah.
He's seen as a real visionary leader in the industry.
Okay.
And, the analysis also highlights that the rest of the management team also has a high average tenure, which indicates stability.
Yeah.
Deep knowledge of the institution, shared experience. They've been through a lot together.
Yeah. And how has this management team demonstrated its ability to handle challenges and communicate its strategies effectively to investors?
So Huang has shown that he's willing to address competitive pressures head-on.
Okay.
For example, by really emphasizing the fact that demand for computational power in AI is just increasing.
Right.
and that favors their hardware.
Yeah.
They've also had to deal with, geopolitical issues, things like export restrictions on their advanced chips.
Right.
In terms of communication, their annual GTC, the GPU Technology Conference, is a key event. And Huang's keynotes at GTC provide a lot of insight into their strategy, latest advancements, and their roadmaps.
That'll do.
So that transparency is good. For investors, it's reassuring. They know where the company's headed.
When we look at a company from a value investing perspective, we also have to think about the ethical considerations. Are there any noteworthy points raised in the analysis about NVIDIA's ethical reputation?
The analysis suggests a bit of a mixed picture on the ethical front. There have been some discussions and reports about the data used to train some of their AI models, with scrutiny over the potential use of copyrighted content from platforms like YouTube and Netflix.
Right.
Now, these kinds of issues raise questions about, ethically sourcing data in AI.
Right, that's a big question.
Huge question. But on the other hand, NVIDIA has publicly committed to upholding human rights, ethical labor practices, in their supply chain. So it's a bit of a mixed bag. The management has driven a lot of shareholder value through growth, but these ethical considerations around AI training data are definitely something to be aware of and monitor.
Yeah, it's a really important nuance. It's definitely a conversation that's happening out there and something to keep an eye on. Now, let's talk about how NVIDIA is deploying its resources. Chapter 2, Part 2, capital allocation. Where are they choosing to put their money?
So they're strategically investing in a few key areas, crucial for their growth and dominance. They're putting a lot of money into expanding their semiconductor manufacturing in the U.S., which is partly a response to, geopolitical stuff.
Makes sense.
And needing a more resilient supply chain.
Yeah.
They're also investing heavily in data center infrastructure to meet this increasing demand.
Right.
And they're participating in partnerships, like the AI Infrastructure Partnership, to foster innovation and collaboration. So, they're really putting their money where their mouth is.
Yeah. What about their approach to mergers and acquisitions?
So they've been pretty proactive on that front, especially in acquiring AI startups. Recent examples, Run.ai and Daisy, both based in Israel. Are really good examples of how they're trying to enhance their AI software offerings and their foundational models.
I see.
They've also said publicly that they plan to keep pursuing strategic M&A, using their cash reserves.
Yeah.
And they're making strategic investments in a variety of other AI startups, which, allows them to stay ahead of the curve.
Right.
And potentially identify future acquisition targets.
Yeah, that's smart. So it's kind of a two-pronged approach.
Yeah.
Internal development and then going out and just buying the companies that are doing really cool stuff.
Exactly.
Okay. How about their approach to returning capital to shareholders through things like share buybacks and dividends?
Okay. So they've authorized some pretty big share repurchase programs. The most recent one, up to $50 billion.
Wow.
But, it's important to remember that while this shows they're committed to returning value, the actual impact on the number of shares is often moderated by their stock-based compensation. They issue new shares to employees as part of their comp, which kind of offsets the reduction you get from the buybacks. Now, on dividends, they pay a modest quarterly dividend, relatively low yield, but they've increased it the past 2 years. Which suggests they might be more committed to returning capital through dividends in the future.
Okay, that's interesting. One last key metric here in this capital allocation section. Return on invested capital, or ROIC. What does the analysis tell us about NVIDIA's ROIC?
So NVIDIA's ROIC is really high. Importantly, it's been trending upwards.
That's good.
What's really interesting is that it exceeds their weighted average cost of capital, or WACC. And this means for every dollar they're investing, they're generating substantial returns above their cost of capital.
Wow.
This is a hallmark of a company with a really strong competitive advantage. And it's something that Buffett looks for, even if the stock price looks high.
Makes sense. So in summary, the leadership, led by Jensen Huang, seems very capable. They've delivered significant growth and shareholder value. They're investing strategically to fuel expansion. And they're generating really high returns on the capital that they're putting into the business. Okay, now let's move on to Chapter 3, Financial Health. Let's get into some key metrics, and we'll start with market cap. We talked about this at the beginning. It's extraordinary, often exceeding $2.8 trillion. What about their price-to-earnings ratio? What are investors paying for Nvidia's earnings right now?
Yeah, the PE ratio for Nvidia is high.
Okay.
It's often above 40 times earnings.
Okay.
This high ratio reflects high growth expectations.
Okay.
Investors are willing to pay a premium now because they anticipate much higher earnings down the road.
So they're betting on the future.
Exactly.
Okay. Are those high growth expectations actually showing up in their recent performance?
Yeah. Their revenue growth has been exceptional,
Okay.
with year-over-year increases frequently over 100%. That's driven by the demand for their data center platforms and the adoption of AI across all these different industries.
What about their ability to turn revenue into profit?
Okay.
Let's look at their profit margins.
Sure.
Gross, operating, and net.
Their profit margins are really strong, and they've been getting better.
Okay.
Their gross profit margin is around 75%,
Wow.
operating margin above 60%, and net profit margin in the mid-50s.
That's really good.
These are really healthy numbers. They show they have a lot of pricing power, and they run a tight ship.
Yeah, it seems like they're very efficient.
Hmm.
And a strong financial foundation is crucial for any business. What can we say about Nvidia's debt?
Their debt-to-equity ratio is really low, consistently below 0.2.
Okay.
Which means they have a very strong foundation and they don't rely much on debt. This gives them a lot of flexibility.
That makes a lot of sense. Are they generating enough cash flow to support their plans?
Yeah, their free cash flow is strong and it's growing. This gives them a lot of options. They can invest in R&D, do acquisitions, and return capital to shareholders.
That's great. One last metric, price-to-book value ratio. What does this tell us?
So this ratio is really high, often over 35 times.
Okay.
It means the market is putting a big premium on their assets. They believe in their future growth, their technology, their brand, and their leadership.
So to summarize, Nvidia is a highly profitable company, very strong balance sheet, and they manage their debt well. But what about the consistency of their performance? Have their earnings been strong over time?
Historically, their earnings have gone up and down a bit,
Okay.
mostly because of the gaming market.
Right.
But the demand for their data center and AI products has led to really strong and consistent growth recently.
So they've been riding that wave. What about their dividends? Is that a stable part of their profile?
They just started paying dividends recently, but they've increased it for 2 years in a row.
Okay.
The yield is still modest, but this trend suggests it could grow in the future.
That's good to know. And their approach to debt seems very prudent.
Yeah, very conservative. Low debt-to-equity ratio. That adds to their stability.
And finally, how well are they managing their short-term obligations? Do they have enough cash on hand?
Their working capital efficiency is great. Both their current and quick ratios are above 3.5.
Okay.
So they have plenty of liquid assets to meet their short-term needs.
That's good news. So to wrap up this first look at Nvidia's financial health, while there has been some ups and downs in the past, they're in a very strong growth phase right now. Solid profitability, strong balance sheet, and manageable debt. And that brings us to the end of the first half of our deep dive into Nvidia. When we come back, we'll look at market sentiment, who owns the company, and a deep dive into their risks. And stick around to the very end. We've got a thought-provoking question for you about Nvidia's future. If you're finding this valuable, make sure you subscribe so you don't miss any of our analyses. Links to the research and all the other sources are down in the description. And as always, stock suggestions are in the comments. We'll be right back.
See you soon.
Welcome back to the deep dive. Before the break, we did a really detailed examination of Nvidia's business, their management, and their financial health
It was in depth.
through this value investing lens. And now in this second half, we're going to explore what the market thinks of them, who actually owns this company, and then what some of the potential risks are. So let's kick things off with Chapter 4, Market Sentiment. What's the general feeling around Nvidia right now?
Well, the market perception of NVIDIA is overwhelmingly positive at the moment. I
Nice,
mean,
yeah.
fueled by the excitement around AI, their leadership, their stock has seen huge gains, and people really believe in their continued growth. However, it's important to remember high growth expectations are baked into their price, which means it can be volatile and sensitive to any news that might suggest things are changing.
Right, makes sense. So how are professional analysts viewing the stock? What are their price targets and recommendations looking like?
Most analysts' price targets are bullish, with many suggesting even more upside. They seem to be confident that NVIDIA can keep delivering and stay in the lead. But remember, analysts' opinions can change.
Yeah, they're not always right.
Yeah.
We've seen how news can really move these high-growth companies. What kind of news tends to have the biggest impact on their stock?
Yeah, their stock is sensitive.
Right.
Strong earnings, exceeding expectations, that's good.
Yeah.
Any sign of slowing growth or increased competition, that can hurt.
Right.
Big announcements like when they unveiled Blackwell, that's a mover.
Yeah.
And broader trends in tech and AI adoption also influence things.
One indicator of market sentiment can be short interest. What can we learn from looking at short interest and options activity for Nvidia?
So generally, short interest in Nvidia has been low, which means not many investors are betting on the price going down, but there's a lot of action in the options market.
Okay.
This shows a mix of strategies, some trying to profit from quick price swings, others hedging their bets.
I see.
This high options volume just shows how much interest there is around the stock.
So we have a good sense of what the market thinks. Let's shift to Chapter 5, ownership structure. Who are the big players that own this company?
The majority of Nvidia's shares are held by institutional investors, somewhere between 52% and 66%.
Wow.
Big names like Vanguard, BlackRock, Fidelity. This shows confidence from sophisticated investors who've done their research.
What about insiders? Specifically, the management team. Do they have much skin in the game?
Yeah, Jensen Huang, the CEO, has a big stake.
Okay, good.
That aligns his interests with the shareholders.
Yeah.
There's been some insider selling, but that's not necessarily a bad thing. People have their reasons.
Right.
The fact that he still holds so much shows he's in it for the long haul.
Right. Is the ownership concentrated or is it spread out?
Ownership's pretty spread out.
Right.
Many institutional holders.
Right.
The top few are big, but no one has total control.
Yeah.
This dispersed ownership is good for governance.
Makes sense. Speaking of governance, how is Nvidia structured from that perspective?
NVIDIA has a solid governance framework.
Okay.
Majority independent board.
Good.
Most members aren't part of management.
Okay.
They have independent committees for things like audits, compensation, and overall governance. And they have policies to promote transparency and ethical conduct.
So they're ticking the boxes there. That's good to know. Now, Chapter 6, risk assessment. We'll use a SWOT analysis.
Okay, the classic SWOT.
Strengths, weaknesses, opportunities, and threats. What are NVIDIA's key strengths?
Their dominance in GPUs and AI chips is huge.
Yeah.
They have a really strong brand.
Yeah.
Innovation history. The CUD ecosystem is a big advantage. It creates a network effect that's hard to beat.
Makes sense.
And their high profit margins and experience management are great assets.
What about their weaknesses? Where are they vulnerable?
They are dependent on GPU sales.
Okay.
And they rely on companies like TSMC to make their chips.
Right.
That's a supply chain risk. They're not big in the CPU market, and their stock valuation is very high.
Yeah.
Which could lead to corrections if they don't meet expectations.
Yeah, let's look at opportunities.
Yeah.
What are some of the big trends they could capitalize on?
The opportunities are huge.
Okay.
The growth of AI in data centers,
Yeah.
autonomous vehicles,
Right.
metaverse, AR, and VR.
That's a big one.
AI adoption across all industries.
It seems like it's everywhere now.
It is. And government support for U.S. chip manufacturing is also good for them.
And finally, the threats. What could challenge them?
Competition is getting tougher.
Okay.
AMD, Intel, and new AI chip startups.
Right.
There are regulatory and geopolitical risks.
Yeah.
Trade restrictions, technology transfer, the market could get saturated, the economy could slow down, and technology moves fast.
Yeah.
They need to stay innovative or risk becoming obsolete.
That's a really comprehensive overview of the risks and rewards. So as we wrap up this deep dive, Chapter 7, brief conclusion. It's a complex picture, isn't it?
It is. NVIDIA is a great business, huge potential in AI. But that high valuation is a challenge for value investors. Strong fundamentals, great growth prospects, but there's a premium and inherent risks in this fast-moving industry.
And that leads us to our end hook reveal. For you, the listener who's been with us through this deep dive, here's a question to think about. Given their dominance in AI, what could really disrupt NVIDIA in the next 5 years? What's the one thing that could change everything?
That is the key question.
If you found this insightful and you want to explore more companies and themes, please subscribe to The Deep Dive wherever you get your podcasts. You can find all the links to the research in the episode description. And as mentioned, any stock suggestions will be in the comments. We'd also love for you to subscribe to our Stock Analytics AI YouTube channel for more videos. Finally, remember that this is just for research and informational purposes only. AI is changing fast, so please always do your own research before investing.
Absolutely.
Thank you for joining us for this deep dive into NVIDIA. We hope this analysis has given you a better understanding of this company.
Remember, Understanding a business is crucial, whether you're investing or just trying to understand the economy.
We encourage you to keep learning and thinking critically. The world of tech and investing is always evolving, and we look forward to exploring more with you in future deep dives.
We'll see you then.
See you then.